We got the top 3 investment cities in Ontario, and it's not just about the data, it's about what we're seeing boots on the ground on the streets also. So stay tuned. I'm going to give you a 4th city that's a big bonus that we're having a lot of success in right now, that's kind of off the radar. People know about it, but no one's transacting there as much as we think they should. So stay tuned for that. Before we get there, I just wrote a book. I just wrote my first book. It's all about the economics of real estate right here in Ontario and Canada as a whole, what makes our market tick, what's coming in the future, and what you should be doing now with your portfolio. And even if you're a beginner, the moves you should make to get started in the game. Let's get in there. If you find this information valuable, please subscribe and be a good friend and share it with them also. Yes, Toronto is on the list, even though we all know Toronto's become unaffordable the last several years. The average selling price in Toronto, $1,134,000 according to Treb data. Yes, it's high, but it's on the list for one big reason. And in the last couple of years, because interest rates have risen, demand for rental homes in secondary and tertiary markets have declined while vacancy rates have risen a little bit. But in Toronto, it's the opposite. Vacancy rates have stayed very low and rental demand is near record highs. The average 1-bedroom is renting for $2,540, and that's up 21% from last year. So if you're an investor who wants high demand, low vacancy, very, very, very stable rental market, Toronto might be right for you. Yes, Hamilton's on the list with an average price of $831,540. It is much more affordable than Toronto. The average 1-bedroom apartment renting for $1,783. That's an 8% increase year over year from last year. Yes, that's less than Toronto, but still a good increase given current market conditions. What's interesting about Hamilton is about 35% of households are occupied by renters. That means it's a large rental market and there is good demand for rental properties. Hamilton is a fantastic student rental market too, with McMaster and Mohawk colleges. I should know, we do have some student rental properties there. They do very well and produce good cash flow. Now, why look at Hamilton instead of Toronto for if you're investing in Ontario? Well, let's look at some data and give you some data points to actually use rather than just opinions. Now, the average rents for 1-bedroom units in Hamilton versus Toronto are about 30 to 35% less in Hamilton, meaning 1-bedroom apartments rent for 30 to 35% more in Toronto, but prices on average are about 50% less for the same type of property. Now, as an investor, that means to me that the rent to price ratio is higher in Hamilton, meaning I get more income per every dollar that I spend in Hamilton versus Toronto, making it easier to cash flow. Another interesting point is that take-home salaries, according to this data, in Toronto, net take-home salary about $4,700. In Hamilton, $3,700. That's a 21%. Toronto's 21% higher in net take-home income, but that's only 20%. But property prices are 50% higher. That means people in Hamilton have an easier time affording their property and affording their rent, possibly, according to this data, giving us a better quality tenant who can afford their rent better. So those are some data points. Check out Hamilton. I promise you, you won't be disappointed. Bonus, if you're taking a look at Hamilton, don't forget to take a peek at Brantford also. It's 15 to 20 minutes down the road on the 403 from Hamilton. And a lot of the same metrics that make Hamilton great are also existing in Brantford. Now, while you might expect a little bit less in appreciation, you can get a little bit more cash flow to make that up, with housing prices on average at $680,150 as of September. It's more affordable than even Hamilton, and it's worth a look. Yes, Kitchener-Waterloo is on the list with an average price as of September at $795,778. Kitchener-Waterloo is a fantastic option. In the last several years, KW has undergone a huge tech boom. Like Toronto, many tech companies are opening up in downtown Kitchener, bringing in a lot of new people and a lot of new money. What's interesting is that Kitchener-Waterloo is technically outside of the green belt, meaning they have room to expand their borders, but with Ontario's intensification policies, they are doing a very good job of populating their downtown, bringing in lots of transit and lots of density and lots of demand for rental properties. Let's take a look at some data. In comparison to Toronto, average rents for one bedrooms are about 20 to 25% less in Kitchener versus Toronto. Prices about 30 to 40% less. But what I think is very, very interesting, the most interesting part is that net take-home salaries, according to this data, are only 5% less in Kitchener versus Toronto, while the pricing is 25 to 30% less. That means people have a much easier time of affording their properties and affording their rents, bringing you a better quality renter and a more stable, cash flow positive property over the long term. And as an investor, you can't argue with that. If you're ready to navigate the Canadian real estate market with more clarity and more confidence, I want to talk to you. Book a one-on-one consultation with me below, and we'll get started mapping out your investment journey. The link is right here. In the last decade, we've helped hundreds, literally hundreds of investors build a portfolio that sets them free. Okay, it's not just about ROI, it's about ROL, return on lifestyle. We've helped people quit the corporate 9-to-5 grind, buy their dream cottage, retire early, pay off their parents' mortgage, and just bring in a couple extra $1,000 a month to live a better lifestyle. So if that's sounds like something that you want to do too, we want to talk to you.